Signing a personal guarantee could be the single biggest financial mistake you ever make. If your business goes under, your home, your savings and your entire future could be on the line. Too many directors sign PGs without realising what they're actually agreeing to. And when things go wrong, and they do, they can lose everything. Listen, a lender does not care if your business failed due to market conditions, a bad economy, or even circumstances beyond your control. If you signed a PG, they will come for your assets. And if you don't know how to protect yourself, it could cost you everything. I have seen directors lose their houses, drain their life savings, and even forced into personal bankruptcy. And it's all because they didn't fully understand the risks of signing a PG. And I've also had my colleagues help business owners negotiate the way out of them, challenge unfair terms, and even reduce the liability. And that's exactly what I'm going to show you in this video. I'm going to break down exactly what a PG is, how it works, the hidden risks, and how to protect yourself before it's too late. If you've signed one or you're thinking about signing one, stay with me to the end because this could save you hundreds of thousands of pounds. Chris Worden, I'm from Director First, and today we're diving deep into the topic that every business owner and director should understand: personal guarantees. We're going to explore what they are, how they function, and the potential risks involved, and the steps you can take to protect yourself. Now, it's going to be a comprehensive guide and it's aimed to equip you with the knowledge to navigate PGs confidently. Now, in today's video, I'm going to be discussing absolutely everything that you need to know. PGs, sadly, they're a critical aspect of business financing today, and they can have significant implications for your personal and professional life. So whether you're considering signing one or you're currently facing one, this video is going to give you valuable insights to help you make informed decisions. I mean, let's start with the basics. What is a personal guarantee? Now, a PG is a legally binding commitment where an individual, typically a director, agrees to repay a company debt personally if the business fails to meet the obligation. This means that your personal assets such as your home, savings and your investments could be at risk if the company defaults on the loan. Now, personal guarantees are often required for things like business loans, leases on your premises, trade credit agreements like Travis Perkins, MKM, or lease agreements, especially when the business lacks a strong credit history, okay? So let's say you're a new business or your balance sheet looks a bit crap, they're going to ask you to sign a personal guarantee. Now, there's different types of PGs. There's the first one, an unlimited personal guarantee, and that's the guarantor is responsible for the entire debt amount, including any additional costs like legal fees or accrued interest. Then you've got a limited personal guarantee, and that's the guarantor is basically the guarantor's liability is capped at a specific amount or percentage of the loan. So we have them a lot with C-bills where let's say it's a £250,000 loan and the guarantor is only capped at 20% of that loan. So if it goes belly up, he's going to be liable for around 50 grand, not the full 250. Now, the way that these things work, right? When a business is seeking funding, a lender is probably going to require a guarantee, and it's there to mitigate their risk. And how it typically unfolds is this. You make a loan application, so you apply for a credit card or a loan. One of the requirements of the loan is the lender looks at it and goes, ooh, it's a little bit risky this. I'm going to require a personal guarantee from the business owner. Then the terms of the loan are outlined, and they'll tell you, they'll specify the extent of the personal liability, and then the loan gets approved and dispersed once you've signed it, right? Now, you really should be taking legal advice on any PGs. Now, if your business is struggling, 99% of the finance you're going to be offered is you're going to have to PG it, okay? Be very, very mindful of this. Now, If the business fails to repay the loan, the lender will invoke the personal guarantee. They'll hold you personally responsible for the debt. Now, you've got to be mindful of this. There's some really important considerations. Once you've signed a PG, you're going to be waiving certain legal defences. It's basically, once you've signed it, it makes it easier for the lender to pursue your personal assets. Now, in certain circumstances, a lender can demand repayment from the guarantor without exhausting other avenues of debt recovery. They can essentially say, listen, you've defaulted, I'm calling in the PG now. Now, there are obviously advantages to PGs as well as disadvantages. You know, the advantages, it gets you access to capital. A PG can facilitate your access to financing that might have been otherwise unavailable, and that can allow your business to grow. It obviously demonstrates commitment. If you offer a PG to somebody, the lender's confidence in you can be seen as favourable. So you can potentially get better terms. Let's say you're looking for funding, and without a PG, the rate is 10%, but with a PG, it's 6%. So you can get better terms that can make the loan more affordable. Now, I think there are a lot of disadvantages to PGs. Obviously, your personal assets are on the line, your home. You know, this can, gone wrong, you could lose everything. And even, not only that, it can also put serious impacts on your personal credibility. So if you default on a PG, that can adversely affect your personal credit score. And that will impact future borrowing opportunities. Now, people don't seem to realise that if you sign a PG, in extreme cases when it goes wrong, you could be made bankrupt. Like you could lose absolutely everything. Now, these are the concerns you should be having when you're facing a PG. Now, the first thing you need to look at is, right, this, if it goes wrong, is a risk to my personal assets. The person you've signed the PG can pursue everything. Your home, your savings, any investments that you've got. Remember, a claim on this could impact your credit score, so it could impact your ability to get another mortgage, it could impact your ability to raise further finance, and obviously if it goes wrong, legal action could come. You know, county court judgments, enforcement measures at your door. It's like, when a PG goes wrong, I've seen some horror stories. Like, and I asked the director, like, did you not think about this when you took it? You've got to have your eyes wide open to what you're actually getting involved with. Because, like, once you, facing a claim on a PG is daunting. Like, literally, I have people that ring me and they're thinking that they're definitely going to lose the home. I mean, the good news is there are a number of options to help you sort of mitigate the situation. And the first thing is you've got to negotiate with the creditor. You know, if you engage with them early doors to tell them what's going on, there's a number of things that you could do. Now, most people think you can challenge a claim's validity. The chances are that happening, I think, are fairly low. These people that give you the PGs, they've not, you know, it's not the first rodeo. But what you can do is you can negotiate with them. And in some cases, let's say you can get some access to some money. This works well with banks with overdrafts. And I'll give you an example. You've got a 25 grand overdraft and you can raise 5 grand. And you basically offer it them as full and final and they might accept it. Now, if you can't raise any capital, what you might have to do, the best option that you can hope for, is to restructure that personal guarantee over a longer period of time. Now, the likes of Funding Circle, Capital on Tap, iWalker, they're not really, certainly Funding Circle aren't going to accept a smaller settlement. But what they might do is allow you to pay that loan over the next 2, 3 or 5 years. The key thing is I think you need advice on this type of thing. Although you can do it yourself, there are people that will be able to advise you around it who do it day in, day out. And in fact, I'm going to be interviewing a chap called Gary Whitehead, again on the podcast in the next few weeks. So if you've signed a PG, I don't want you to think automatically you're going to lose your house. The key thing is engaging with the person, the company that you've signed the PG, and working out a negotiation to pay it over a longer period of time. Now, let me have a quick drink. Now, before you sign PGs, I think it's important that you consider absolutely everything. Is it the right thing? You know, review all the terms. Before you sign it, meticulously read and understand what's at risk here, okay? Get someone else to read it for you as well, legal advice. You know, always get a solicitor to consult before you sign a PG. I had it the other week, and a guy signed a personal guarantee, and it's a really onerous personal guarantee. And I'm thinking, did you get advice? Because they'll have definitely asked you to get advice before you sign this. And he said, Chris, I was that desperate for the money, I just signed it. And I thought, oh God. Another thing you might want to consider is personal guarantee insurance. There are policies available that cover a proportion of the debt if the PG is called upon. Now, it's not a perfect solution, but it can mitigate the issues. Now, when you're signing getting personal guarantee insurance, be sure to disclose everything to the insurance company, okay? Don't hide anything, because there's no point having personal guarantee insurance, which is quite expensive, and then it not paying out, right? That is a big problem. Try and avoid signing multiple guarantees, okay? You understand, the more that you sign, the bigger the risk. Each additional guarantee potentially is going to increase your personal liability. So I hope you found this video useful. To recap, listen, a PG means you are on the hook. If your business can't pay its debts, if things go wrong, your home, your savings and your future could be at risk. Please, if you're worried about a personal guarantee, pick the phone up. We offer free and independent advice. Chris Worden, Director First. Thanks for your time.